Hey everyone, so we're going to finish off PoolCorp today and we're finally getting to that valuation. So I think you'll find this interesting and the approach that I take to get to a per share number and what I think is worth to pay for and compare that to the current stock price. So depending on when you're watching this, you can use this as a reference point. Now remember, this is just my way of doing things. Please do it yourself in your own way. Valuation is not science. This is an art. There's going to be lots of different perspectives from different people. Please do your own work on this one. Interactive Brokers is the broker that I'm going to be using if I was to invest in this company. Full disclosure is I'm not investing in this company, and I'll show you why when I get through this valuation. But there's a link in the description for Interactive Brokers. It's the best brokerage account. It's the one that I use, and I highly recommend. There's demo videos here on the channel too. So let's jump into that valuation now, and it's actually pretty easy to do. There's not really any rocket science needed here. No DCF needed. The reporting is really tight, so it's easy. We can just look straight at the diluted earnings per share, and that's just a really easy way to look at the earnings of this business, as it includes the stock-based comp and the buybacks that's already been factored in. From 2012 to 2019, prior to the weird pandemic stuff, earnings per share was growing at 20% per annum. If you looked at the current 10-year, it's actually earnings per share is 27%, but let's look at it at 20% because that's a more true reflection of the business growth. Now, then we look at the current diluted earnings per share number of $18.70, and we keep that going out 20% for 10 years, and we get $120 diluted earnings per share. Now, put whatever multiple you want on that number. I might put 18 on it, let's say. That's probably on the high side. Let's assume that everyone thinks this company is amazing in 10 years' time, and we get a multiple of 18 on that $120. So it is a really solid business, and if they can do 20% for 10 years, you're going to get an 18 multiple at least. So that would put a stock price of $2,160 in 10 years' time. If the business just continues, that's still 20% per annum, by the way, from the current stock price. But let's be more conservative now. I could say 15% growth and a 15 multiple. That's $75 per diluted earnings per share in 10 years' time. And put a 15 multiple on that, we're looking at $1,125 stock price, which is a 13% per annum move from here. But then there's the negative case, and I think I'm not going to be too far wrong when I talk about this negative case, because if COVID didn't happen, diluted earnings per share would have actually been around $11 to $12 per share. So if things return to that level, which is probable, I don't know whether it will happen or not, but let's assume there's quite a pullback in the next year or two, and then growing that number out at, say, 15% from there, well, we get about $45 diluted earnings per share in 10 years' time. Put a 15x multiple on that number, and we get $675 per share, which is only about a 7% per annum growth from here onwards. So that more worst case scenario is about the same as probably the overall market, which I guess isn't too bad, but it's not that enticing, is it? But let me try to remind you of the things that I do like about this business. I think it's an amazingly consistent business. I like scale distributors because they're boring, yet they're kind of cool at the same time because of that scale. Their track record is exceptional. It makes it easy to see what has been happening and how consistent this business is through their numbers. Their historical diluted earnings per share is really good. The growth has been good. Even that single-digit revenue growth is fine because all those buybacks and acquisitions and dividends that have been coming out as well make things a little bit more interesting. The valuation at the moment is actually about fair. There might be some rocky trading coming up as things maybe normalize in the space. It might see a big drop-off in the new pools as they were just a lot were built in 2021 and 2022. So I think if you can look out longer term in this one, I think that's going to be an advantage. But yeah, the things that I don't like about the business, I don't like that I can't get info on the deals and the multiples that they've paid. I want to know how those acquisitions went. But I'm really not sure about the runway for growth here in this business. I guess single digit revenue growth is pretty mature, and that could be fine, and that could still turn into a reasonable investment. But I don't know. It's not founder-led anymore either. The management teams seem fine. The C-suite execs, their salaries are pretty high, which I don't like. I just don't see a big upside scenario here. I just think I would want the price far cheaper so I can get a better margin of safety here, just in case I'm wrong and I miss something and my worst case scenario plays out. I still want a reasonable return for the risk. So that leads me to the question is, what price would I actually be interested in this? So what I did was I ran the numbers at $200 a share. So if I was to buy this at $200 and the diluted earnings per share came back to $11, then you would get 15% per annum for the next 10 years with that $200 share price. It might not get anywhere near $11 earning per share, by the way, but that's my guiding stick. So I feel more interested at $200 a share. And then like my lower case scenario would be like 15% per annum. And the upsides then hopefully looking into the 20% range. Now, I guess my concluding thought would be this is a great business. It's a very good one to follow, as you just never know what could happen. Markets are crazy. Markets have been crazy. Maybe we get a bargain on this rock solid, very good business. It doesn't tick all my boxes, like I've said a few times already, but for a really good, consistent business, if things get really ugly in the markets, this could be a bit of a safe haven. So there we go. That's my full analysis of PoolCorp. I hope you've enjoyed it. Leave your comments below, add things, pull it apart on me further if you like. Be very interested to hear what you think. So yeah, hope you've enjoyed. I'll see you in the next video.